evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday evening, July 23rd, 2020 at 6:10 p.m. as I'm putting this out. A couple of things. My subscribers know that I've written them that starting, I don't know, another week or so, I'm going to be beginning live webinars during a period. It looks as though, from the response I'm getting, which seems to be overwhelming from my subscribers, that they want this to be on a weekend. It might be a Sunday night, a Sunday morning. It's not looking like many want it on a Saturday. Sunday seems to be the time. Folks, I'm available. So it's that simple. It starts my day off. And remember, the beauty of this is as we leave the fall, it's spring, summer, and then fall, we are home more on Sundays, and that works. I don't know if I want to do it and wait for the markets to open at 5 p.m. and then talk to you as the markets are opening on Sunday night. That could be something cool. Monday night football, yeah. Sunday night football, yeah. I think a lot of sports could cut into that. But in the morning, what the heck? I'll be competing with church hours, I guess. And of course, the important news, be it the Meet the Press and the Fox programs and so on. Okay. By the way, on those, they will be free to my subscribers. There'll be a pre-sign-up period. After that period's over for the sign-up, others that want to come in will pay at the gate to get in. A subscription gets you in free. If you buy any of my research, you'll pay $2.50 to get in. I will be answering questions during it. They typically last, probably between 30 minutes and an hour. They will be posted on the website, and you pay there to view them as well. So the subscriptions, again, another freebie, and that's important. I got a lot more equipment in yesterday, so I'm going to be doing a lot more work, which is something I love to do, and my house got the air conditioning fixed. That was really something. I can tell you a story. If you ever use these services that the home insurance, you got a lot to learn before this. I have it for my home, which is a good-sized home. I can't believe what I went through. I won't name the company. I was not happy. Okay. We're in a correction phase in the stock market. We've gotten to a point where the market wants to correct. The market's looking at the president today saying that conventions as we know them for the election, they're pretty much a done thing. It's going to be virtual going forward. It looks as though the big convention he was going to do in Jacksonville, unfortunately, because of all the outbreaks, he can't do that. I don't know if that's an advantage, disadvantage. There's certainly not going to be any debates from what I can see with Joe Biden and Donald Trump. I think we can write that off. I don't think it's going to occur. So now the question is, what are people going to vote on? Where's the hidden votes? Are they going to be Democrat, Republican? You got to start building that in. Metals, a bit of a correction hitting for the first time. Silver's had just a stellar run-up. Gold's no slouch. Today, gold settled from its all-time high close, about $2 away. Yes, the highest highs further than that, but from its all-time high close, I think wow. Unbelievable rally. And that's impressive. Dollar, just in a cratering mode. You'll get a bounce here and there, but it's in a cratering mode. And if we take a look at notes and bonds, you're like at a 0.58, 0.59 in the 10-year note yield. Got to look at that. That's a very low number. And I don't see anything that's going to change it in the immediate future. It does appear that they're trying to get something done next week, not this week, between Democrats and Republicans. First, the Republicans got to agree on what the next relief package looks like, and then see if they can agree with Democrats to get anything done. So the people whose money ends this week, you're out until they tell you what they're going to do. In the weekly area chart of closes, we're up nicely for the week. We're still up 17 points. That could disappear. On a Friday, anything can happen, as you know. When we look at what the charts did, the one thing you should pay attention to is you had an outside day down. That could be a sign that the market again has reached the trade top. You have to pay attention. Doesn't mean it has. It could have. When I take a look at the chart action, the reason I say that, I now have a pattern of higher high, lower low with that action. So I've left this pattern that I had of higher lows, higher highs. That's off the table right now. The support in the market is lower at 31.83, the 18-day average of closes. The resistance has been crystal clear. I want you to take a look. This is how you looked yesterday. This was Tuesday, rather. This is Wednesday when I did not do the update for you. I did it for my subscribers, not for you. And the resistance would be wherever that Bollinger Band comes in. It's now 32.88. Today's high in the market, 32.84.5. You're in a zone. It didn't hit it. Pulled back, may not hit it. This market might want to, if you will, work its way a bit lower here. Wouldn't surprise me. Could this have caught some people long today? Yeah, might have, because you made the higher high and then broke. And here's what I'm looking at. Do you see the slow stochastic? You lost the bullishness in it. Why? If you take a look at yesterday, this is Thursday, you still had it. Now, Friday, this is, remember, we're in the evening trade. I don't know if it's going to stay lost or not. But if it stays lost, you're looking for the market and price to make a comeback where the two come together around the 31.83 level right now. Going to be important. And you can't judge intraday in the evening that it's going to stay lost. Too difficult. But with a 75 reading, it just didn't slightly get lost. It's pointing that it wants to do something. Yay for the Nasdaq. What do I mean? I had been telling you since right here, my work right there, said watch out, you're going to make a run at the 18-day average of closes. Both numbers are still over 80 right here, and this was the 13th of July. Market loses the reading and doesn't get it back the next day. I think the pros were selling short on this rally with the stop over those highs. That's my guess as to what they'd be doing. I'm looking for wherever that 18-day average comes in, and boy, the market goes up, and I'm questioning, is that going to happen? And I was probably saying that right here, and I know I would have said, and I said it to all my subscribers, I'm going to play what I've learned. And over time, the high percentages, you're going to come back to the 18-day average, but because it's taken so long, that number's going to keep climbing. So when it was first lost and confirmed lost, that 18-day average was in the Nasdaq 10,346. You got to remember that, because the longer it takes, the more you're giving up if you're playing the contra trend that it's going to get there. Here's the one opportunity to go short, and this was this Monday. The market made a higher high, gets a reversal. Now the question is, what do you do? This is Wednesday. This is yesterday. I am still looking for price in the 18-day average, but look at how it's climbed rather sharply, and bingo, hits it today. So as far as I'm concerned, the market has gone back, neutralized what it owed, and now the question is it going to find its footing right here like it did back here, like it did back here, and like it did in these zones? Do you see that? So this is not an area where I'm looking for shorts. This is an area where I stand back and say, okay, you can play a little bit there. The odds favor until this is really over. This is no more than a correction in a market that's otherwise bullish. In the Dow, you never did get the embedded reading. You just stayed overbought. You had an outside day down today. If we take a look coming in, the high today was 27,057. The upper Bollinger Band was 27,082. Didn't hit it, but you had a key reversal down. And key reversal, the highest high of the move recently. Market breaks from that. Now the question is, do you get follow through? If you do, look for strong support in these numbers. Look for the right here, the 200-day average, 26,082. The 18-day, 26,228. That's where I'm looking for the support. But momentum is turned down on you, and at the least, it's overbought. I don't see the bulls trying to defend anything just yet. The Russell's got a stronger picture than the others. You figure that out. We've seen a rotation here. Both numbers are over 80, but not yesterday. It's not an embedded reading. It's an overbought market trading against the upper Bollinger Band and finding support at the 200-day average as it trades in there. The trend is up. The market is overbought. Can it embed? Well, you can't count tonight's numbers. So you got to go back to yesterday's, which is the close of business right here. Here's Tuesday. Here's Wednesday's numbers. Both are over 80, but not here on Tuesday. So we have Wednesday, both numbers over 80. Thursday, both numbers. Come on. Doesn't seem to want to. I don't know. Oh, we don't have the Russell yet. It won't open because it's the Russell. Duh. Stupid me. Ice. You don't have the 3 days in a row. Let's leave it at that. VIX. I'm looking for price in the 18-day average to come together, especially if you lose the embedded reading. The embedded reading is giving the bears the edge, but not a big one off the Bollinger Band. And what I've told you repeatedly is there's a pattern here that has showed itself that each time you're hitting the lower Bollinger Band, you're getting a bounce back to the 18-day average of closes. Until it stops working, I have to assume it's going to work. It would get fuel for that if it loses the embedded reading. I'm looking for the resistance wherever that 18-day average comes in and the pros to come out. They've got a lead on the market at this point. They're about $1.50 ahead on the trade. In the T-bond market, just a sign of strength. Overbought, but this market hits the Bollinger Band, backs off, stays in that top quadrant. I realize so many of the top banking firms came out 2 weeks ago. We're going to be at 1%, going up on the 10-year note, and these are going to climb. So far, that is not working out to be the case. 10-year is still in what I call this ugly pipe. This is the most difficult formation to trade. Number one, you lose the volatility in the market. Number two, the question is it a base or a top in the market forming? Right now, the market is staying within it. The bulls have control and the market's latched on to the upper Bollinger Band without an embedded reading. It's an overbought market into a resistance point in an uptrend. In the dollar index, this is what I call gorilla glue. And that occurs, and I noticed it right here, it occurs when a market gets to a Bollinger Band. It could be the top or the bottom, and it doesn't get off of it. And when that occurs, especially if you get an embedded reading with it, it's a dream trade until it stops. And bingo, you've just been in a collapse zone. Traders say they can't believe it and blah, blah. The hardest thing to do is to catch a trade like that and ride it. This market, and currencies are my favorite markets to trade because they're the biggest markets in the world. That's number one, the biggest markets in the world, and they trend the best from everything I've seen. And you're just locked into a trend right now. Corrections in it because it's embedded. I think the pros will be selling until they lose the embedded reading. In the euro, it's the flip-flop, the mirror image. It locked in, and it just keeps running to the upside. Same thing. I think the pros are waiting for breaks here to get long again. Japanese yen, this is again that pipe trade. You're just stuck. Sideways action. You think you're going to break out downside like you did here, you went nowhere. You think it's upside, you're going nowhere. Very difficult. I don't even waste my time in those. You're trying to break out of a pipe in Bitcoin again to the upside. So here's a market that's back into an uptrend. It's over the Bollinger Band, which to me means no, it's never a buy over a band and it's overbought. I see what it's trying to do, and yes, the bulls have the advantage, but I think up here, right here, which was today, I think the smart money came out of the market and they'll wait to see what's next. We're flip-flopping between the Brent WTI and the Brent and WTI oil. That's what I was trying to say. You had been, up until just here, staying over the 18-day average of closes, which means the advantage went to the Brent. Now as that's switched gears on you, now the advantage is saying, okay, Brent's weaker than the WTI. But why? Because you're in a pipe. And I've said this to you over and over. You lost the embedded reading. The 18-day average is the goal, and you're not going anywhere in there. What are you doing right here in the WTI? That's what I try to point out in my subscription videos to everybody. And that's the advantage of them over this. Okay, you're not going to get more than a third of what I do in my other videos. If I can give you one good idea every now and then there and teach while we're at it, I think that I'll earn your loyalty to stay a subscriber. What are you doing in gasoline? I can tell you what I'm doing. So long, I got better things to do. Now, Nat Gas, this vertical price spike ended today. You had a high that got over that high. You're not in a trend. You're now just neutral. You've got a higher high, a lower low, a market that was oversold, got out of that, and it's trying to figure out what next. You know, I realize there's a lot of traders out there that love trading, but futures, too risky for them. So they like to move on to something they understand, they think better, be it ETFs and spiders. That's fine with me. I take the same analysis I do in futures and apply it to this. Whether you're a subscriber to my ETFs, to my morning subscriber videos, or my full research package, Included will be now, as they're going to start on a regular basis, my webinars. People that aren't are going to pay $2.50 to join in the webinar if they want. If they want to view it on the website, it's going to be at least $2.50 to view it there. There'll be a cutoff time to join into the webinar for subscribers. Then I have to open it to everybody because it's going to be limited in its seating. I'm not going to buy one of those licenses for thousands of seats. This is what I cover in great detail in the spiders and ETFs. There's something for everybody. I promise you, I'll be up at 40 charts very shortly. I know that bets is going to be one of them for online gambling, and I'm looking to see, you know, I love when you write me and ask me to look and see if I should add something, but you get too many in one area. Like I've got all the metals that I want, I've got the stock indices, maybe there's more currencies that I want, maybe there's a little more in the interest rate sector. We'll figure it out, put it together for you. The point is, a lot of information, and information I'm very aware that other people just don't have what I have. That's not to say I'm better or worse. I do things my own way. I appreciate my way. I've gone to others what they do, and at these prices, they don't do it. They'll give you, I know some great traders that I admire. You think they're giving you things for $8.95? If you think so, you're sort of wrong. For me, I'm about the masses. That's what we want. If you want to trade futures with us, that's what we want. We're not stockbrokers. But to get our information and learn more and support what we're doing, just go to our website under the word research, take it from there. You can always call us. We'll be happy to talk to you and take you right through everything we've got. I'm Ira Epstein. Good to be back today. I'll see you all this weekend. Remember, I may not put these out at the end of the day tomorrow. I might do them over the weekend because I like to do the weekend edition sometimes on the weekend for you. So don't hold me to this until the weekend. That's when your next financial market and the metal market for the futures will come out. I'm Ira Epstein. Take care.